All right, guys, we're moving on in our technical analysis. So we've done support and resistance lines and a little bit of formations. What those technical indicators showed us specifically on behaviors is the price behavior, the sentiment of traders when they get to a specific price level. It's a collaboration. In other words, a lot of traders will look at the same level, same formation at the same time and expect the same outcome. So it's kind of like a self-fulfilled prophecy. So very strong in predicting what will happen if we break a specific level, being support or resistance. Okay, so that's one thing. Next thing that we want to look at is, once again, if there is a trend, remember we're looking for to trade either an up or a down trend. Sideways, we're not interested in a sideways movement. We typically see here that's a sideways movement because there wasn't really higher highs and lower lows. It's just been a whole bunch of noise. The best place to see it is on the daily. If you look at this daily chart of the LZ over here, it looks like a blind man doing pea shooting or target shooting. It's just all over the place. That was a nice trend going down. That was a nice trend going up as the candles were making high highs. Here, a candle gapped up, long one down, then mid-range like a harami, up, down again. It's just all over the place. So not a trend. But when that trend does occur, we are very interested in being able to know when that trend potentially loses its velocity or its momentum. Remember when we spoke about the triangles, we said, okay, when that action takes place, when that breakout happens, there's velocity, there's momentum and velocity, but that fiddles out at a specific level. So when we're trading, we are always looking, if we are in a trend or in a trade, an indication of when a trend is moving its velocity, its speed, is very important because that tells us a lot about the traders in the market. If we have a loss in momentum and velocity, it tells us that less traders are adding the trend, more traders are leaving the trend, the buy or the sell position. Hence, there's less confidence, which will then eventually end up in a state of, okay, nobody believes in the trend going any further. So the next set of indicators that we're going to use is typically indicators that will paint a picture for us around that data set. Now, remember I said to you guys, you don't need to be a genius to become a trader and make money. Now, that is very true. But fortunately, there were also geniuses in the world that is incredibly clever people that created incredibly powerful indicators via complex mathematics. And the first guy that we're going to look at that did that was a guy called Bollinger. Now, let's just go over here. So John Bollinger, 1980s, is a long-time technician of the markets, developed the technique of using moving average with two trading bounds above and below it. Unlike percentage calculations from a normal moving average, Bollinger Bands simply add a subtract a standard deviation calculation. Standard deviation is a mathematical formula that measures volatility, showing how stock price can vary from its true value by measuring price volatility, blah, blah, blah. It all boils down to higher grade maths and complex calculations, which is fantastic because it shows us how you can apply math and calculations to specific price movements. Because at the end of the day, remember, these guys have only got price movement and volume. It's basically the only two data inputs that they have, and how the variation of those data inputs can be used to create indicators. All right, so you can go and read more about Bollinger and his bands and how it works, etc. I will send the link on Investopia, very popular sites with trading information, etc., etc. It's like a Wikipedia for traders. So let's have a So Bollinger Bands, we add them over, and it exists, like we said, with the following elements. The middle line, as you can see here, let's see if we can change the color of that line. Enables visualization. Sorry guys, now I can't change the color on this system. I thought I could, but I couldn't. All right, so the middle line is the moving average. Okay, remember it's saying it uses a moving average, and then he uses above and the below band, indicating standard deviation calculations of the price. Effectively, what it says is the middle line is the average, the moving average of the 20-day moving average of the price. So over 20 days, what was the moving average of the specific asset's price? Right, so that's what the middle line is. So if the price is below the line, it means currently the market is trading below the average over the last 20 days. If it trades above that line, it means the price of the asset is trading above the price of the last 20 days. So just gives us an insight. If you look, 20 days is pretty much a month's worth of trading, 21 working days. So it just gives us an indication of where the market is currently compared to an average over the whole month. Is it above the price of the whole month, or is it below? So that's what the moving average is. The bands, top and bottom band, is just the standard deviation. So it looks at if you have a high volatility trade, a movement like this long big green card, the bands expand away from the moving average. Why? Because the volatility of the price movement has increased. So the bands is just a deviation calculation based on the comparative with the moving average. Okay, all of those things are really not important. What is important is, what does this thing measure for us? Well, historically, if you go read up, Bollinger Bands are used to say, okay, if it reaches the opposite band, then it means it's oversold, potentially signaling a retracement to the other side. If it crosses the mean, it means it's potentially a trend reversal, kind of like insights. Well, I don't use it for all those explanations that's out there on Bollinger Bands. I don't find them very effective, but then again, I haven't tested Bollinger Bands over a large variety of financial instruments. What we'll use it for is one of the indicators to indicate the following. Yes, oversold, overbought. So overbought will be at the top, oversold will be at the bottom. But what Bollinger has managed to do with this indicator is giving us the ability, if we are in a trend, to give us an indication that if a trend is slowing down or weakening. For instance, here we've got a little bit of a bull trend going up. Okay, volatility or the velocity is increasing. Bands are expanding. Why? Because price movement is quick, fast, and long. And the price movement here closes above the Bollinger Bands outside range. All right? Like any trend, we've got a pullback and then a run off again to make a new high. But what happened at this new high here is pullback. So that's a swing top, and that's a swing top there. Is that it closed inside the Bollinger Bands while the previous swing closed outside of the Bollinger Band. That is a clear indication of a reduction of volatility. In other words, this trend is most definitely slowed down. Okay? And true as Bob, if you look in this indicator, not far thereafter, we had the trend actually reversing in the opposite direction. Here we've got another one, trend moving up. It pierces or closes outside the line, retraces, closes outside the line again. No indication of a slowdown of momentum. Right? Candle, the three different ways that we look at Bollinger is as follows. Let's save. So that's our moving average. And let's say that is the outside line, and that is the below line. All right. So let's make a nice, see if we can draw candles here. So now we have a candle. Oops, obviously need to be green, because we're going up. And another candle. All right. Candle going up. Candle. Here we go. It's not as easy as I thought it's going to be. Okay, so it goes up, goes up, goes up, and it breaks, closes outside of the Bollinger Band. Okay, so it closes. Other one, let's make them fat. Let's redo this. Let's make it nicer. Okay, so let's choose the fat one. So we've got a candle, and another candle, another candle, another candle, and that candle closes outside of the Bollinger Band. So typically, it is the exact same one as, let me get you a nice good example. There. Those candles, all of them closed outside of the Bollinger Band. See that, right? Then the second way that could happen was that the candle formed, but it then formed a very thin line, a tail of the candle, and that tail pierced the Bollinger Band. Oops. Pierced the Bollinger Band. Okay? So that's typically there, and you'll see more loads of these piercing there. So physically, it didn't close outside the Bollinger Band, but it pierced the Bollinger Band. And then the final one is a failure where the candle did not close outside of the Bollinger or below the Bollinger, or it did not pierce the Bollinger Band. Now, if we do this, obviously, the other way around, it's exactly the same thing. So, you know, you got candles, you got a candle, you got a candle, candle outside, candle inside with a thin line. Oh, sorry. Do that again. Candle, candle. These guys, I'm really drawing ugly candles for you. There we go. Oh, my hat, Daniel. Let's just do that. The thin line there. I would. Oh my word. Oh my word. Okay, let's try it again. There we go. And it pierced the line. Other option, last candle, it fails. So we've got a close, a pierce, and a failure. Those are the three things that can be done. You've got Bollinger Bands where the candles of our trend closes above the or below the band. It pierces the band, or if it fails the band. All right? So that would be a failure because it didn't pierce or close above the band. Here, it closed outside of the band. There, it pierced the band. So what is the relevance of that? Well, that's how we look at our trend movement. So here we had an uptrend. It closed outside of the Bollinger Band. It pulled back and then it failed. So that is an indication. So if it was outside and this one was outside as well, let's see if we can get an example of that. Then there's no slowdown of momentum. All right, outside and outside, no slowdown of momentum. Let's get to 5 minutes. We're probably going to have more fun because we have more candles. Let's just zoom out on the 5 minute quickly, and let's see outside, outside. All right, that's not a slowdown. We don't regard that as a slowdown. Outside, pulled back, outside, pulled back. And then pierce. So there and there, between those points, there's no indication for us of a slowdown. Why? Because both candles closed outside of the band. So if we have an outside close, here we just had a failure. So outside close and a failure, that's an indication of a slowdown. If we have an outside, let's see if we want outside and a pierce. There, outside, and then it pierced. See, it still made a new high, but it went outside of the Bollinger Band, came in, and then it pierced the Bollinger Band. Once again, that indication, based on the Bollinger Bands, and its outside perimeters is for us an indication that this trend has lost its momentum. All right. Remember, every trend has got a retracement and then a rerun. So this one had a retracement and a rerun, made a new high, but it only pierced the Bollinger Band, which was an indication that this thing has lost its velocity, it's lost its momentum. All right. Once again, it's not something we will trade independently. So this is not a trading strategy or an instrument that on its own will be used to take positions. Absolutely not. All we need to know is Bollinger Band, go read up on it. The main objective of Bollinger Band is to indicate historically overbought and oversold. And effectively, if something is overbought, it means, okay, it's sold out. No more is going to happen. It's going to slow down, which is an indication of a reduction of momentum. We've added elements to that, and we said, all right, an indication if the candles is outside the band, it means an increase in momentum. If on the second swing pullback and run up, those candles are outside that band again, it means there is no slowdown of that momentum, although it's on the other side. Remember, Bollinger Band says if the candles gets to the other side of the band, it means oversold. We agree with that, but what if it goes to the other side, but closes outside, pulls back and close again, that's not an indication of a slowdown, all right? That's an indication of an increase in velocity, increase. This trend is picking up momentum. So very simple. We're going to use it in conjunction with others. Bollinger Band, mathematician of the 80s. I will forward the link so you guys can go read that. And then we will use them soon in conjunction of other